Welcome to the eCom Collab Club podcast, where operators, risk takers, and battle-tested founders drop the lessons that cost them time, money, and their sanity, and share what actually works so you don't have to pay the same price. Hosted by Peter Gardner and Adam Pierce, founders of the eCom Collab Club and Blend Commerce, the Shopify CRO agency, and proudly sponsored by OmniSend. Email and SMS marketing so good, it's boring.
Hello. So guys, are you tired of guessing where your stock, your costs, or your customers will be next month? Yes. Well, today guys, we are talking with Nick Moutter, and Nick was part of the team that scaled Olivia's from a kitchen table to 8 figures, rescued Houseology, our administration, and built Ascend AI to make data do the heavy lifting. So if you want to dodge stockouts, guard margin, and solve problems before they bite, listen in. Nick, welcome to the show.
Thank you very much. That was a nice little introduction, wasn't it?
Oh, I have to practice these things just so it sounds nice at the start, and then I can just, be my usual crappy self with my Brummy twang afterwards. So yeah, I did my best.
I'll take the accolades.
I think you should take Adam's intro there and put it on your LinkedIn bio. That's what that'll work.
Yeah, you've just redone it for me. Who needs AI?
Nick, thanks so much for joining us. Great to have you on here, and a very unique person to have on. I think, as we were chatting just beforehand, very unique in position where you're in SaaS yourself. You've grown brands, so you're sitting on both sides of the table. For those of that don't know your bio yet, they haven't read your LinkedIn, and don't quite know what your background is that I'm referring to here, would you mind just giving us how the hell you got into this position, where you come from, what you did, and give us the full-on life story?
Yeah, we probably want to keep it short, otherwise we'll be doing an evening podcast as well. But yeah, it's quite an eclectic story, really, when you think about it. I mean, my background was professional football, and I was playing football up until a certain age, and then ended up doing the whole university thing, and was always a bit of a natural geek, right? I was the kid who was always building computers in his bedroom growing up after finishing football. And I started off in technology sales, actually, kind of being more commercially minded, but very quickly realized that I had issues with authority and probably couldn't work for other people, like most. And I've just always had a natural affinity with how technology can be used to automate and simplify processes for better outcomes. I think everything I've ever done has always been revolved around that. And in many ways, I'm quite fortunate age that I've been through the era of like the real start of the internet. And I know you can't tell it by my my shaven face and all the rest of it, but there's some miles behind this face. And we were fairly lucky that we went through that whole evolution of the internet and how it's changed, and the real kind of waves that we've had. And if you look at them, there's been the internet, there's been mobile, and then for me, the next one is AI. And we've been privileged, if that's the terminology, to experience all of those. And I started my first business like most, which was a small agency, and was one of the first people at Lad Bible, if you know Lad Bible. And at the same time as the agency, there was a big change in ad tech, and that's kind of where a lot of our monetization was coming from, was from advertising, and chose to go down the ad tech and martech route, where I started a business which was called Admedo, and it was a machine learning based advertising technology platform that someone knows a DSP. And we were the first in the UK to build that in 2011, 2012.
Okay.
So I've got quite a lot of experience in building technology and software products that's based around data and machine learning. So I've been in that space for 15 years or something, right? And I was hugely naive, thought I could take on these big American giants and start doing the same in the UK. Very quickly realized that I needed to get into the world of venture capital and raise capital to do it. So from quite an early age, I was raising venture capital, and we think we raised about 18 million or something like that. And grew that business out across the UK, Europe, US, and eventually exited that in 2019, 2020. And I wanted to kind of stop and spend more time with my son and go fishing, but I ended up getting really involved with the world of e-commerce and understanding that, which ultimately led me to start my own eCom brand, which many would know as Olivia's. And when I looked at e-commerce, and particularly the homeware sector, I felt that this sector that we address, which is mid to high end, was fairly underserviced. But I couldn't believe that there was always this stereotype or thought process that e-commerce was incredibly lean, and that it was far more cash flow effective and cost efficient than it was a typical retail store. But actually, when you looked at it, it wasn't at all. Right, you still had to buy stock from Asia or get it manufactured, ship it over on containers, wait for it to arrive with you with very poor cash flow because you had to pay out for it, get it then stocked, and then hope that you sold it. And if you didn't, you had to sell it for pennies in the pound to get rid of your dead stock. It's not really great, right? And then obviously the cost to acquire customers and all that on top, it's not as lean as people typically thought at that point. So I kind of said to myself, well, we can't do drop ship for furniture, and I don't want to hold stock. So how do I get the best of both? How do I create a positive cash flow business without untold stock? And what we did is we spent a bunch of time building a technology product, which in essence leveraged wholesalers and suppliers' stock as our own, and integrating to those, and within selling that product on our own site, but within milliseconds, ring fencing it on their warehouse and allocating it to us. So it meant that we got to benefit from all of this stock and all of these products without having to pay a penny in stock upfront. We actually received the money from the customer before we ever had to pay for the product. So we overnight created this positive cash flow business, and obviously we were paying to the cost to acquire the customer via Google and Facebook and all the typical channels 30 days later. So we were riding positive cash flow, which was like unheard of. So that's how we started Olivia's, and God, I could go on for ages. So it started Olivia's. We ended up in a position where we bought our biggest competitor at the time, which was Houseology, because they got impacted by us taking market share, but also a couple of things. And before you know it, we ended up kind of creating this holding company investment vehicle, which became MOOT. And the next evolution of that was that the technology we built to operate these businesses on, we got approached by other retailers saying, hey, can we use that and pay for that? So we started licensing that out to people. And then naturally, over the next few years, we've been, as MOOT, our investment vehicle, we've been acquiring, investing, and selling businesses in around the e-com space and other areas. So we bought a Shopify agency, and we exited that recently. We had a door business, and digitally kind of evolved that and sold that just a month ago. And then we've got some other technology and software products that are all machine learning database-based. So they're both one called Lift and then another one called Ascend. Ascend is specialized in the e-commerce sector, so I'll quickly mention Ascend. And I guess that's the primary reason why we're speaking today, because that's kind of the real jewel in our crown at the moment. So what we had when we were growing our retail businesses, our e-com brands, is that we'd see, for example, our conversion rate was down the last 24 hours. I'd shout across the office, something's wrong. What is it? And everyone would look at me with that kind of emoji with their hands out like that. And they like, let me subjectively go and find out by looking at these 100 different disparate sources and coming back with some possible idea of what it may be. And each one of the people that come back with an answer would have a different answer or reasoning. And the latency to that decision making was huge. And I was just kind of struck immediately how bad this was, and we can't be the only company that's having this issue. And then spoke to other, owners in the sector, and they had exactly the same. And I basically said, well, why don't we build a product that aggregates all of this data and uses the exact same systems and methodology that we had in our previous ad tech businesses of aggregating all of this data, using the data models and machine learning to analyze it in real time and tell us the answers. And tell us the answers instantaneously, so that we didn't experience the ramifications of that issue before it was too late, because the implications can often be huge, revenue-wise, margin-wise, whatever it may be. But really look to go deeper. And God, I'm going on here for ages. I could go on for ages. So
Carry on.
if I
It's interesting.
too much, but you then got the situation where we had these businesses that were going tremendously because they were homeware via COVID, and then all of a sudden the market normalized, and nobody seemed to care about profit during COVID, right? It's like profit just wasn't a thing. It's like, how fast can you grow, keep throwing fuel into this fire. And we were making mistakes. Like, I'm sure everybody made a ton of mistakes. And the biggest mistake most retailers made during COVID was that they increased their cost base heavily to compensate and cope with the volume and demand levels. And then as soon as the demand level normalized, it was like, oh God, we're far too heavy on cost here, and we're now not making any profit or making far less profit. What the hell do we do? So all of a sudden, instead of focusing on revenue, people started to look at the bottom line more and started to focus on, okay, where is my profit coming from? How can we be more profitable? So the real focus of Ascend is to look at all of those data layers through your business, from customer acquisition all the way through to fulfillment, product purchase, everything, and say, right, where are my margins? Where am I making money? Where am I actually losing money? Because as we spoke about earlier, you'd be surprised how many retailers out there didn't realize actually how little or no money they were making on some orders. So we went and built a product to give you those answers and give you anomaly detection and really focus on the analytics and the profitability side. And my biggest kind of focus is always around net contribution and looking at, actually, after my customer acquisition cost, after my product cost, after everything, what do I make on that order of that product or by that brand or by that category? And that is the true measure for profitability. It's not how many mirrors can I sell, because you need to understand the bottom bit before you go and drive the top bit. And that's what Ascend does.
That's awesome. Nick, thank you so much for that wonderful introduction and context that you've just given everybody, because that is super, super interesting with your journey and how you've gone through agency tech. Now through agency, being a brand, now you're building tech, you're touching all those different points of view that our listeners will be very interested in their background as well. Can we just take a step back? Let's obviously talk a little bit more about Olivia's. What was the moment when you went, look, okay, cool, I need to get into this e-commerce game and make sure that I'm building something? What triggered that with you?
There was one part of me which was intrigue, and the only way I was really going to answer the questions properly was by doing it myself. And I was actually purchasing this home that I'm in today, and was in a very fortunate position where I wanted to kit it out nice and not just rely on IKEA, and I certainly didn't want to be on my knees with Allen keys. So when I went to look what was out there just wasn't really anything that was servicing the mid and upper end of the market very well online. And I knew the product was out there because interior designers who wanted to kit the house out, they had access to the product, and it was in the UK sitting on a shelf, but it wasn't made available to the general consumer. I was like, well, this is criminal. Not everyone wants to pay for an interior designer to get hold of product who's then going to put a huge margin on for themselves as well. So it was making product available that was already out there and answering my own intrigue to see if what my theories were correct.
Oh, awesome. And tell us a little bit more about the journey with Olivia's. You obviously still own Olivia's. What's your involvement with the company now?
So we've managed to bring in much more competent people than me to operate it on a daily basis, and they have done an incredible job over the last few years. And I think what's really testament to that business is that despite it growing, I mean, we were hitting 18 million, 24 million run rate within a year of launching.
Wow.
That was the level of growth we were talking about. It was crazy. And we were one of very few businesses that, because of our model, because of our technology that underpinned everything, that when the market normalized, we didn't close. And most of our competitors, I'd say 80% of our competitors post-COVID have now gone. They've all disappeared. And Olivia's has just continued to capture more market share and grow organically, and just keep increasing its margins, keep increasing its product lines, increasing its awareness, and just growing consistently. So yeah, I work with a management team there on a weekly basis, and still, God, it's my baby, and I want it to continue to do well, and as we all do. But fortunately, there's far more competent people running it on a daily basis, and because I have lots of other interests now, I just don't have the time to do it, but still very much intrigued by it and involved with it on a weekly basis.
Okay. And is Ascend your baby now? Is that the one that you're looking after mostly, or is there another one that you mostly looking after?
That's like saying, who's your favorite child?
I'm asking you that question.
You can never answer that question. I ask my parents that God knows how many times, and they never tell me, but I know it's my brother. I'd say I don't spend the most time on Ascend. Again, there's far more competent people involved in that business than I, and I'm not really operationally running any of our portfolio. But I am probably spending the most time with our other platform business called Lift at the moment, which again is a data platform, but it's focused on the iGaming industry, which is incredibly interesting, but that's another conversation. But yeah, so very much pushing Ascend. I've been on calls with Ascend this morning, and although it's a relatively new product, there's a good awareness for it now, but we're just really trying to push the awareness side of Ascend, because as I always say to the team and everybody, you can have the best product in the world, but if no one knows about it, it's kind of pointless. So it's just trying to spread the awareness for it now, because it's a free product. And I think that's one thing that I haven't mentioned. We were building it.
Earlier with us, man.
We were building it, and as we were building it, we said, well, the only way this thing can work is that if we get lots of data in here to really drive machine learning, to have as much data as possible, to learn as quick as possible. And we were fortunate from a financial standpoint that we weren't relying on revenue from it. So we said, well, how do we just make this available to the masses? And I listened to a podcast once, and I think they used the terminology of going scorched earth, making it open source. I was like, right, that's what we're doing. So my finance director and everybody else wasn't very happy with this decision. But, I said, right, let's just make it open source and everybody can use it, because everybody is going to benefit from this product. And making the barrier to entry so low that it literally, and this is the great thing with it, it takes like 2 minutes to onboard. They've done a seamless integration where you connect it to your Shopify store, you press connect, and it pulls in all of your data from all of your data sources across customer acquisition, Shopify, analytics, everything, and does it all in a few minutes. And for free. We kind of made it a no-brainer, right?
Yeah. I mean, from the conversation that we had just 5 minutes before we jumped on here, it sounds incredible. It sounds like something this market really, really needs. How long have you guys been in the market for now? How long has it taken you guys to build the platform? And then really load up that question I'm asking you there is, if it's a free model, I think the skeptic is going, okay, how do you make money out of it one day? Because everybody always wants to know, okay, cool, that's fine, but how do you make money off this at the end of the day?
Yeah, so we've been building the product for just over 2 years. It's been a long time to build it. It's gone through various iterations, and we were in kind of beta or beta, whether you're American or English. And we've probably only really been out of beta like 5 months. And just getting people on it and using it now, because there's bugs. There's always going to find bugs as you load people onto it, and we're getting feedback of, hey, I wish it could do this, can it do this, and making iterations, and things break. So we've been kind of steady on the gas pedal for the last few months, just to solve all of that out before we kind of go too crazy. In terms of when are we going to make money, so the idea is that we're going to have this freemium version, and once we've finished the next kind of iteration, there's going to be a load more features, and that's going to have a pro level which you can pay for and you can upgrade, and that allows you to have multiple stores connected. It allows you to have more integrations. It allows you to do multi-currency. It allows you to do some extra things that you can't on the free version. So a paid version will come out, and then people can choose if they want to pay to upgrade or they want to stay as they are.
Yeah, I'm glad that you guys have got that coming, because I think the skeptic would be going, okay, cool, you're just going to be selling off my data. That's why you want us to put our data in here. that makes a hell of a lot of sense. That you guys
Yeah, we can't rely on free forever, I'm afraid.
Yeah, no, that makes a hell of a lot of sense that you're doing that, making it a bit of a gateway drug, if we're putting it bluntly. But yeah, thanks so much, Nick. Really appreciate that detailed background that you gave us there. It's a lot of gold, and it gives us all a great understanding of who we're talking to today.
Yeah, fantastic, Nick. And I want to go to forecasting now, and I'm probably going back to Olivia's now. I think what I remember rightly, I think was it half of your bestsellers were out of stock in 2020. Is that right?
Yeah, so again, we're referring to COVID, and what happened was that even though we weren't holding stock, we could see stock levels of all of our suppliers, and none of the suppliers, wholesalers had forecasted for COVID. No one had, right? No one knew what was going to happen, but everyone was at home and they were doing up their homes, and it just meant because the demand went up, supply couldn't cope. So all of a sudden, the suppliers, and because the supply chain time to get product made and get it into the UK just meant that there was this period of time where all of our best sellers were just out of stock and no one had them. And suppliers had all of these retailers screaming to them saying, where is this product? And they just couldn't get it in quick enough. And then the cost of containers went through the roof. So product then became more expensive to get in, so then margins shrunk. You had all of this stuff that went on during COVID, and this is what I was kind of alluding to before, that although revenue went through the roof, margins just got squeezed heavily. And actually the revenue probably was 30% down on what it could have been, because you always had your best sellers out of stock. So imagine what revenue could have been.
And that was then, because I guess the protagonist of then you developing the tool to be able to then create the new model effectively.
Well, no, we had this model then, we had the technology then, but in terms of the Ascend product, yeah, I mean, Ascend was being built just after that, but even Ascend couldn't have forecasted for that. Nobody could have, because what machine learning will do, it'll look at historical data and use predictive algorithms to work out, okay, what are we going to expect the trend to be off that historical data? But there was no historical data for COVID. So it could never predict even, and I think none of the stock forecasting tools would have been able to cope with it, because it was a huge unknown. So you just had to cope with the cards you got dealt, right? And these were all the things that were going on during COVID, and why it was just so chaotic of a time for people to navigate. And God, when I look back, the mistakes we made, the things we didn't know, it was crazy. But I know that we weren't the only people, and actually we always stayed close to a lot of our competitors and talked to them quite a lot. They were making the same mistakes, if not worse. So that almost made us feel a bit better.
No, absolutely. I think, it was definitely a mark of that time, wasn't it? And I think, it was the same probably on agency side as well, as that people were, I guess, more prepared to discuss, because it was completely uncharted territory that no one had ever sort of experienced before. I think with obviously, sort of now, and hopefully obviously nothing like that does happen again, but hey, look, who knows? In terms of, I guess, a sort of a few rules or a few kind of, I guess, sort of principles of thinking around forecasting and stock from a stock point of view, do you kind of have in your mind like a sort of a safety stock rule in terms of percentage that you keep versus sort of next day restocks, that sort of thing?
Well, we disintermediate from that, right? Because we don't hold the stock. So what we do is that if stock with our suppliers goes under a certain level, we will stop marketing it. And the reason is that you can end up in a situation. So if a particular warehouse management system of one of our suppliers isn't refreshing every minute, it's refreshing every 24 hours, it could tell you there's 5 products in stock, but actually they could have sold that day. So you could have gone and sold 4 of an item to customers that are now going to be angry because you've got to tell them that actually that product isn't actually in stock and you've got to refund them. So we will only market products that we are over a certain amount of stock, but also where we know that the latency to the refresh of their stock levels is fairly frequently. Because if it's a 24-hour, you've just got issues, because, as you say, the stock could diminish. I want to go back to your previous point, though, if you don't mind, about how you said about agencies coping with COVID. And I think agencies were probably the worst culprits of this, because they didn't know what the hell was going on, and they couldn't really empathize with the retailers. So you had agencies, all of a sudden their revenue was going down, they had to send everybody to work from home, and they weren't really getting any subsidies from the government. But what they were doing is they couldn't understand the pains that the retailer was going through. So you had the agency saying, no, you need to spend more because demand's really high. And you had this conflict, and we saw it, that there was agencies just didn't know how to cope with it, and they managed it really, really badly. And a lot of the time, the first thing that retailers did post-COVID was address their agency and the costs of their agencies. Because it's the first thing you look at when your profits, when you started losing money. It's like, oh God, which it's overheads of people and outsourcing that you first look at. And again, a lot of agencies really shrunk post-COVID, right? I'm sure you'll know loads.
Yeah, I mean, our own. I think, you know, it's we as an agency, I think we grew by about 130%, was it, Peter, during the COVID period? And then sort of after that point, you know, it was very difficult to know what to expect. And equally, like you say, you know, sort of we all, because obviously with the e-commerce, everyone I think became much more an expert because they were doing more of it, both as a brand, as a customer, consumer. Everyone started becoming a bit more critical of actually what they were getting. So I think it definitely changed the game after that period.
Yeah, I'm sure no one's got the data on this because they wouldn't have, but I'd love to see what the average retainer value was pre, during, and post-COVID for an agency. I bet you it's a good 30% down on what it was.
Yeah, it'd be definitely interesting to see.
It really squeezed agency fees.
Yeah, it was a weird sort of time because you had gone through that big growth as an agency. That felt like it's exactly what the brands were going through. That big growth, you thought, okay, cool. I'm gonna plan ahead. I'm gonna order inventory for an agency. It was okay. I'm gonna get some more staff, and you sort of planned and forecasted for that continued growth that you were having. And even though you were still getting growth afterwards, I think we grew 30% the next year. It felt like you were getting smaller. It felt like you weren't actually that big because as an agency, your overheads had gone up as well. So it was a very, very difficult time, that navigating that just post-COVID time. And tracking the fact that during that time, there was a lot of people that went from freelancers to actually becoming agency owners because they got a lot more work. So they actually built it up. And then all of a sudden you had more competitors as well. So it's been a very tricky time after that.
Yeah, I mean, we talk about normalization. Just look at the public markets in terms of the valuation of e-com businesses pre and post COVID. You know, if you sat there as an investor and looked at your asset values and looked at your portfolio, you're like, right, that business is doing 10 million. It's worth 50 million because we could easily get 5 times revenue for the value of this business, given the growth trajectory and everything else. Pre-COVID, that's what you'd got, 5 plus, you know, times revenue. Now, 1.5. So all of a sudden, your portfolio value, your asset value is diminished 80%.
Yeah, that's mental.
From pre to post COVID.
Yeah, is it Allbirds? I think you probably know this better than I do. Is it Allbirds? It's like pennies on the dollar now. It's really not.
Well, yeah, I mean, I'm sure we'll come on to this topic in a bit, but you know, the biggest ones that got hit were the Boohoo guys and THG. You know, they got hammered, right? They got absolutely hammered. Stock prices went down over 80%, didn't they? I think now they're trading at 93% down or something.
Jeez.
For Boohoo. You know, and before pre-COVID, they were this giant, right? They were untouchable. But again, we'll talk about it in a bit. They had what on paper looked like a really healthy gross profit margin percentage.
Yeah.
But as soon as you started to realize that gross profit margin from a cash perspective was £2 an item or £3 an item.
Yeah.
You didn't have much to play with when your costs went up.
Yeah. So let's continue on that right now. Margin protection. Tell us how Ascend is helping with this, and making sure that, you know, that's the problem it's solving and identifying this early.
Yeah, so I could talk about the subject quite a lot. We touched on it before we joined, but so and we shouldn't sit here just blaming COVID, because it's not COVID's fault, right? Why this happened. It was, and I'm sorry if I offend people here, but a lot of retailers, e-com owners, were just stupid. They made stupid decisions, and everyone had this huge vanity of being so obsessed with top line revenue that they forgot what was going on underneath the sheets. And that normalization of demand and costs going up is what led people to start thinking about this word called profit, which no one had even considered before. If you spoke to people about profit, like, it's like, I'm talking about revenue growth, just going to grow. And the one area that we always wanted to focus on is what we refer to as net contribution. And net contribution for me is the most pivotal metric that any e-com brand should be looking at. And what I mean by that is, after I bought my product, the cost of goods, after I've paid to ship it into me, after I've paid to ship it out to the customer, after I've paid to acquire that customer, and then my relative associated costs, what have I actually got left from a penny and pound perspective per order, per category of products, per brand, whatever it may be? Because until you know that, you shouldn't be spending any money on marketing. And there was always this intermediation between the customer acquisition team, the operations team, and finance, and not really understanding that, because what that net contribution figure is should determine where you're spending your ad dollars, right? You can see that actually we are getting the best net contribution from silver mirrors. We should be pushing more ad spend into silver mirrors, because actually the ROAS is good, the cost to deliver, the return rate, everything is good. So this is what Ascend does. It looks at all the different data layers and all of the data points in your business to say, where am I making money, how much, and where I should spend more money. And actually, at the same time, where am I losing money? And that's the biggest surprise a lot of retailers get is, God, I didn't realize I was losing money on those products. We need to stop marketing those, because we're wasting £30,000 a month on Google ad spend for a product that we're losing money on every order. So let's quickly stop. And this is a separate subject. There's so many platforms out there that are trying to address attribution. And I don't care what anybody says. I will argue with anybody. There is no single answer to attribution. Triple whale, whoever you are, you're not giving people the answer. And the reason is that they're all subjective decisioning. And I could put Olivia's now into 3 different e-com attribution platforms, and every single one of them would give me a different answer. So if they were correct and attribution was correct, why am I getting different answers from different people, right? And I've seen people go and make decisions off the back of these attribution platforms that then have ended up going more negative. So we didn't want to do that. We didn't want to go down the attribution route. We wanted to focus on profitability and analytics and really understand my business. What products am I making the most on? What is getting the best conversion rate? All of these different data points are really, from a trading perspective and profitability perspective, that's what mattered to us. So without waffling on and getting on my soapbox even more, that's kind of where Ascend focus is, aggregating all of this disparate data into one single platform, telling me in real time what is going on, what I should be doing about it, and if I do it, what will it result in? That's the most important thing. So we built forecasting into there and built an anomaly detection. And anomaly detection, I think, is huge, right? Because this thing will tell you if there's an issue. It will tell you if your PayPal sales have dropped below 20% in the last 2 hours. If so, you've got maybe an issue with your PayPal integration, which is then causing your conversion rate to drop. And then ultimately your revenue could be down 15% because 15% of your sales come from PayPal. This tells you in real time before it takes you a day or two to find out, which is typically the case with most retailers. And it's no longer relying on a group of people to give you subjective decisions on what they think the issue is. It tells you in real time based on accurate data, because it's the data that's come from all of your disparate data sources, crunched it, like it to having a team of data scientists being able to give you answers in real time, sitting next to you. So that's what Ascend is doing. And for me, it is a fundamental part of every retailer, whether you're doing $1 million a year or 100 million a year, you should be having a tool like this in your business. And obviously, the bigger your revenue, the bigger the impact is going to be.
Yeah, that's awesome. So does Ascend also have the capability? Because from what you're saying here, it sounds like that's very much the focus on, okay, cool, this is the first purchase. Is it built in and smart enough to understand customer lifetime value, retention, customer retention? Can you identify products that are maybe profitable on that first purchase, but actually toxic and making your customers churn? Is it also then smart enough to understand what is, like what you were saying with, making a freemium model? Is it smart enough to understand, okay, cool, this is a bit of a gateway drug. This is that lead capture. We're getting them to purchase something small here, but we know that they're going to get hooked in after that with our brand. Does it take into consideration all those things as well?
Yes. So what it will do is it allow you to pull LTV by product, by brand, by all sorts of different things, as in the first purchase. But
Yeah.
what it'll also allow you to do is look at a customer lifetime and say, actually, even if we go a bit more aggressive on our ad spend and lose money on the first order, our typical repeat order rate is 2.7, 3.2, or whatever it may be over the first 12 months. So we're always going to make money from the second order. So we can be more aggressive if we want to. So you can then decide how aggressive you want to be with your ad spend and your ROAS.
Yeah.
So yeah, it'll do all of that, and it'll break it down by all the different cohorts and segments that you want to address and look at.
Awesome. So old school RFM segmentation, that type of segmentation, all good to go with Ascend.
Yeah, so you can pull really detailed reports. There's basically a report builder, so you can go and select all the different things and that you want to analyze by and compare them. And what
Yeah.
it also does, which I haven't mentioned, which is really cool, which will be coming out soon, is that it will tell you how you're comparing to other stores in your category, in your jurisdiction.
Mm.
So if you're like, God, our average order value has dropped a lot in September, it will say, actually, if you're a sneaker brand, all other sneaker brands are seeing a drop in AOV in September. So you're not the only one.
That's cool.
So it'll use all of that aggregated data to allow you to benchmark how you're performing against the industry, and it'll tell you if you're doing no good, right? It'll say, actually, your conversion rate compared to other stores in your category is 20% lower. If you do this, you would improve.
Yeah. And is that built in? Is that people? Are you aggregating that data just from users of Ascend, or have you got access to other data as well that
No,
you
just
are helping
Ascend.
to benchmark?
Just
Awesome.
Ascend. Yeah.
Yeah. So tell us. I'm enjoying this geekiness that we're doing here, because this is speaking my language. What other cool features haven't we spoken about yet that you're going, shit, you know what? Our system actually does this, and this is something that we found a hell of a lot of value at Olivia's using X, Y, or Z feature with Ascend.
So I think the one is that it's able to pull in quite vast amounts of historical data to allow you to do that predictive modeling. It allows you to compare against different data sets, which we've not seen anybody else do. We spoke about this before. What we've recently launched is our chat feature. So if there's something that you're either short on time for or you don't know how to find, you can type in the question, and the AI chatbot will actually go and find the answer for you and give it you. So if you can say, what is my best-selling mirror in the last 30 days? It will come back and tell you. So it's got a really cool features like that as well. And then when you get to the next set where you have multiple stores, it allows you to compare your different stores. So how is my conversion rate in the US store compared to the UK? What is my AOV difference? What are the products that are working better out there than here? So it allows you to break it down by multiple stores and jurisdictions as well, because you'd be surprised. And so one thing that we really see with Olivia's is that the AOV around the London area postcodes compared to the north is just so much higher, which you typically kind of expect. But it really goes into depth on that and says why, what is the typical products people are buying? How is that different? And then you can choose then how you market to people in different geos compared to others, because a lot of people, when they're doing customer acquisition, just blanket UK. And actually you can get more granular that and say, actually, we're going to promote these type of products more to people around this particular area because their homes suit this more, or whatever it may be, and the data will tell you that. So it allows you to get really granular with it. And we're consistently seeing our ROAS and our ad performance on Olivia's continue to improve. Obviously, it's not growing like 20% improvement month on month. That would be the holy grail, but it's going up just a couple of percent, 1% every single month, getting those small wins.
Yeah. And that compounds over time, which is awesome. Yeah. I mean, I
And the
love
same
the
with
fact
AOV. And the same with AOV. I think Olivia's AOV is something like 50-60% higher than it was 18 months ago.
Is that
Huge.
because Olivia's pushing out and telling you what to push as recommendations, and then building that into your custom upsells and cross sells?
Exactly.
Oh, that is.
It's more about informing the marketing decision more than anything.
Yeah. Conversion rate optimization,
and where the trading and product team should be focused on getting more imagery or doing content creation. Where should they be creating content on what products, because they're the ones that are converting better and so forth. So it informs a lot of decision in all different areas of the business. So this is why I say that Ascend isn't just for customer acquisition. It's not just for your trading team. It's not just for your ops team. It's for everybody. And it really allows them to have the transparency across the business in all of the different areas, but also make people accountable.
Yeah. Tell us a little bit more what you mean about that. Make people accountable.
Well, we know it's like in every brand or every company, it's the operations guys are really messing up our refunds and return rate because they're not packaging things correctly, or the customer acquisition guys are the one reason why our marketing spend has gone up and our returns come down or whatever. So it really makes everybody can see the results of every different section of the business. So if one area is dropping in performance, it's highly visible to everybody. And it's not a case of finger pointing. It's just like, okay, well, this is what we need to address. So how do we all collectively make this better?
Yeah. So it's pinpointing the biggest problem in your business right now, and it's showing you, okay, cool, we need to focus on this.
It's got a really simple traffic light system.
Yeah.
And it'll show you how things are going up, down, and it's got positive, and on the dashboard you've got your positives and negatives, and it lists all the positives for the last 7 days or 14 you select, and the negatives, so that you can address the negatives.
Oh, that's awesome.
It surfaces in the dashboard the most prominent things that you want to know straight away, and then if you want to get into great detail, you then can.
Yeah.
On that front of, I guess, kind of, picking stuff up with the Send, Nick, what can you think of any times where you kind of, it's been used where there's been something that has, got the strangest sort of anomaly you can think of that's been picked up by a Send, or situations where it does pick up something that just generally does go unnoticed, like one of those two scenarios?
I wouldn't say I'm that close to the customers to know that, but I say the main one is that people realizing that they're losing money on product sales that they thought they were making money on. That's by far the biggest.
And I think we definitely have seen that quite a bit over the years, because I think sometimes there's this kind of premise that you have this kind of hero product. Sometimes that can be based on profitability, but I think a lot of the time it tends to be based on the fact that the founders or certain key members of the team prefer that product to their others, and it kind of gets positioned to that hero product. But in reality, like you say, the profitability of it is not really kind of one of those things. When I think you kind of obviously are using this, and brands are using Ascend, would you say there are kind of 3 key things that you must see are green to be able to kind of continue your day, or 3 key things on there you're saying, look, if these things are down, you need to get into it and obviously work out what the hell is going on right now?
Probably not. I'd probably say there wasn't across every brand. I think it's more that the anomaly detection isn't picking up anomalies. That's more of the issue, so that there's no urgent things, because you're always going to have areas where your AOV is down 3%, but that's not really too much of an issue right now, because we think that's fairly norm. And once the system's got some data and seen that actually it did the same in the same month last year, or that you started selling less raincoats in July and than August than you did in January, then it starts to pick that up. So no, I wouldn't say it's blanket across everybody, but it's the same for everybody, right? If your revenue's down over a certain percentage, everybody's worried. If your margin's down over a certain percentage, everybody's worried. If your customer acquisition costs have gone up. So of course there's those standard ones, but outside of the standard data points, I wouldn't say so. It's mainly that there's no real anomaly detection alerts.
On the I was going to say, sort of thinking about Houseology now, sort of moving on a little bit in terms of, because I know you've got obviously a lot of different experiences here, Nick. Which metric would you say proved that the brand was salvageable, I suppose, sort of pre-acquisition?
They had a really healthy margin, which was much better than Olivia's at the time. They had a average order value, which is still higher than Olivia's is now. They had incredibly high average order value, and they had a very loyal customer base. I think their repeat customer rate was over 40%. So just those three metrics alone and they had a very large database of customers. So they were the main ones for us, that they had this very valuable and consistent database of people that were coming back to purchase. The average order value was high, and the margins were good. So yeah, that's the main things that we looked at, and we managed. Although the purchase rate ended up being after the businesses ceased trading for a small amount of time, so there was a detrimental effect. But they had a great brand as well. They had a really nice brand and some great historical content. And we were really torn between, do we operate these as two separate brands and kind of have them in harmony, or do we bring them together? And ultimately, we ended up slowly merging them together into Olivia's, because there was too much conflict and too much crossover. So we thought we'd focus more on bringing them together and unifying it. And sorry, the other area is that the B2B side of Houseology was huge. And that was an area that Olivia's really wanted to get into. So it really opened the doors for Olivia's to start its B2B efforts.
But on that front, actually, from a B2B perspective, I think, a lot of the e-commerce podcasts and content that is out there, a lot of it doesn't really, I guess, kind of go too much into the B2B side, which I think is a shame, because there are so many businesses now that we initially started off working with as a D2C brand who have kind of gone into both angles. From your experience, I mean, what would you say are the biggest challenges in B2B versus B2C that maybe people don't realize until they get into it?
First of all, how you have to acquire your customers is completely different. How you have to treat those customers and nurture them is completely different. So you can't have a customer service team treat a B2B client the same as a B2C or D2C client. So yeah, it's every touch point has to be different, really. There's not much that's the same. And now, with the way Shopify has built out its wholesale version, a lot of retailers are in a specific B2B portals for these guys, so they can apply discounts to their account, they can do different things, they can apply credit, whatever it may be. So the whole shopping experience is different, and we actually allow our B2B customers access to a much greater catalog of products than we do D2C.
Right. Okay.
So yeah, everything is different. It's a completely separate team in Olivia's. CS handles both, but they know whether the customer's B2B or D2C, so they know the different way of handling them. And because the nature of Olivia's being a homeware, our average order value is much greater, right? So we're having people who think nothing of dropping 15, 20, 30,000 pound on a B2B order. And a lot of these, we have a lot of celebrities and things like that we obviously want to treat well, because they can post about us on Instagram or whatever it may be. Because if you deliver someone a bad experience when they got a huge following and they post about it, it's a big detrimental effect. And don't even get me going about Trustpilot. So yeah, Olivia is slightly unique because it's homeware. If I was selling T-shirts, maybe my B2B side would be slightly different. But the average order value is just so high on our B2B front, and our B2B customers are typically interior designers, so they're always doing new projects. So you want to keep these people happy.
So in terms of comparing the two, operationally, which one is easier, B2B or B2C?
B2B.
And from a profitability,
you didn't even finish your question then, had you? No.
From a profitability point of view,
B2B.
Interesting.
Cost to acquire customers, despite everything, is still higher than it's ever been.
So would you ever consider dropping D2C then?
No, because that's where you get your brand awareness.
So they
Interesting.
do need to be symbiotic, I guess. To
They
make
have
that
to be.
work.
But we're almost at a position now where I bet you B2B is 40% of our revenue now, maybe more.
40%
And you
of
don't see-
revenue, but more profitable.
Yeah, and you don't get as much seasonality.
Okay. That's interesting.
I suppose the other benefit as well with that is that, you know, on the seasonality front as well, is they're buying ahead for the season, I guess, aren't they, as well? So I guess that sort of circumvents the issue.
Well, interior designers are planning for projects months in advance, typically weeks in advance, where we're all consumers on this call, right? It's like, oh, I don't like that mirror behind me, I'm going to get a new one. You know, you're not planning for it typically. And most of Olivia's, this common misconception that you have with homeware is that people think that you sell wardrobes and sofas. We barely sell any wardrobes and sofas. 90% of what we sell is homeware as opposed to furniture, which is, before you said those words to me, I'd said they're the same thing, but they're not. So homeware is your side tables, your lamps, your mirrors, those type of things. That's where Olivia's sells most. When it comes to sofas and that, you actually find there's so many specialists out there in the sofa world that you can't compete with them. And there's a lot of cheap crap out there as well in the sofa world. So trying to judge the difference of a cheap Chinese rubbish compared to a decent one on an image is really hard to ascertain. And there's people that do sofa as well. You know, God bless Louis Rose. We lost him recently. He's a good friend of mine, and you know, those guys doing great in the sofa space. And there's people out there. You know, we're all used to DFS sales and everything else. I don't want to get involved in sale culture.
So Nick, what would you attribute your insane growth that you had with Olivia's when you first started out? You said that within the first year you went to 18 million revenue. Was that correct?
Well, yeah. So what you have to remember is that our background was customer acquisition in essence. So I'd spent 15 to 20 years of driving sales for other people. So all I ever knew was how to drive sales online for someone. So it was the first time in my life I was doing it for myself. So we weren't fresh people coming in trying to work out customer acquisition. We'd already, in our other businesses, had loads of homeware clients. So we knew. So that's what I put it down to, is just our background of doing customer acquisition and paid marketing. We'd been doing paid marketing for God knows how long. So that's all we relied on from day one, because we had no brand, no one knew us. We were solely reliant on paid marketing.
And in those early days, were you guys profitable at that point as well, or was that something that you went, look, we're just going to drive the acquisition, we're going to drive the brand awareness, we'll worry about profit at a later stage?
We weren't losing money. We were kind of washing our own face. So we kind of grew organically. Every now and again, there might be months where I'd have to put money in. Other months I take money out. You know what it's like when you're kind of starting. But we didn't really take any money out, to be honest. We'd probably say we lost money. Definitely from an EBITDA perspective, we did in the first year, because we were, you know, investing so heavily in the technology and all those type of things. So I'd say only really kind of during COVID, after then, did we start to see much greater profitability. We definitely burnt some cash to start off with, but you got to remember that we were only 5 or 6 months old when we bought Houseology, and COVID hit. So all of that happened really kind of early in our journey.
Okay. So you guys, you bought as well with pretty early doors. So if you had to go back now with all your experience and you had to give Nick from 2018 some advice, and, you know, ultimately it's like, what advice are you going to be giving to people that are just starting out on how they should go about it? What should they be focusing on, and how do they get their business off the ground to make it a success?
An eCom brand?
Yeah.
Really big question, actually. I'd say start small, product catalog. I think the brands that I see do really well lately are ones who are starting with a couple of hero products and really getting traction with them and building a brand from them, typically organically and via Meta, because Meta's lower down the funnel from, you know, a purchasing perspective. So I think get one or two really good hero products that really solve an issue and a cost. Everyone knows these business basics, right? That the passive purchases that people can go and buy them without feeling like they can't pay the rent or mortgage. And it's addressing a large total addressable market, right? And create some really good, unique, raw content, which isn't expensive. Not expensive to create content these days. God, look at all the AI tools and everything out there. And then start with a basic paid ad strategy across the likes of Meta and Google. And start small. Don't get too excited too quick, right? Start to understand all of the data points in your business before you really scale. And certainly one thing that I did wrong, and this is just my general nature, is trying to do too much too soon. So really focus on getting a really good hero product. Keep refining that product, whatever it may be. God, I've got some products here around me and in my house where, there's one I bought a few months ago. I don't know if you saw them, like Viking style knives, like the big knives. And they just focused on these knives, really great content all over social media. It wasn't expensive content. It was a guy in a freaking forest somewhere chopping up a piece of steak on a log, showing how sharp it was. And they kept refining it and they got their traction from that. And that, I think those type of businesses, the ones that have done really well. There are other businesses like my friend Aaron Chatterley, who had Feel Unique. He's got, I think it's called Indu. He's got a really cool makeup cosmetic brand for teenagers. So he's doing something which is different. So he's getting a lot of awareness off the fact that it is different and a unique proposition. But start small, focus on the product, focus on profitability, early on. And I'd say avoid taking external investment for as long as possible. So if ever.
I saw some smiles when you were saying some of those. What were your biggest mistakes that you made when you were starting out, that you go, I really should have known better at that point?
Yeah, you'd hope so. Because when I started Olivia's, I'd already sold 2 businesses, and that was kind of my 4th. And you still make mistakes, right? I don't care who you are, you still make mistakes, and you kick yourself because you're like, why did I do that? If I was I always say this to my management and teams in different businesses: if you're a consultant coming into this business for the first time, what would you say? And it's kind of getting your head out the trenches and actually looking at it agnostically from an objective point of view. And you're like, oh, actually, well, you just tell you to do that. Stop messing around with that and do that. Like, well, then. But because people are so in the trenches that they forget. I've been. I also act as a non-exec for a women's fashion jewelry brand, and they've gone through, since I got involved, they've gone through huge growth, and we just solved a few little problems that they just didn't think about because they were so in the trenches with like specific areas of the business. I'm going off on tangent now. I don't even know if I'm answering the question, but they had an amazing business. They've been going like 8 to 10 years, founder led, never taken any external capital, highly profitable, but it kind of hit a ceiling. And it was only when I came in and said, right, have you thought about this? Have you thought about this, this, and this? And like, no, actually. And we implemented them, and we made these small changes, and the impact of them was huge. Like they've gone like this. They are by far the fastest growing women's fashion jewelry brand now around. And I kind of did that. I'm quite happy to say for free. I wanted to advise these people because they were great people. Got on with them really well, and I felt that they had huge potential. And it was really nice to help them and see the success that they've had off the back of the changes that I've helped implement there. And it also proved to me as well that there are a lot of companies out there that have the ability to do a lot more if they've just got the right people around them.
Founder blindness, I think.
And that's another thing I'd advise, actually, when you go back to, is that when you're starting, get somebody around you, whether a confidant, an advisor, whatever, who's been there and done it. Because whenever I've had that in my businesses, those people have been the most invaluable people, and without them, we would never have succeeded.
Yeah, I mean, that's brilliant
and
advice.
Again, if anyone wants to reach out to me, and I'm happy to go and do the same for them if it feels right. And because I love helping brands and helping businesses, and I had people do it for me, so I should certainly do the same back.
Fantastic.
Yeah. Oh, that's an awesome end to the episode. Thank you so much, Nick. That is for those of you listening. I think you could do yourself worse favors than reaching out to Nick and finding out and picking his brain. That's for sure. Nick, thank you so much for jumping on here. We have unfortunately run out of time. In terms of the questions that we have had for you, we know we're near getting through those. And
That's my fault. I have a tendency to waffle.
No, it's been brilliant to listen to exactly what you're saying. Where can people find out more about yourself? How can they reach out, and how can they find out more about Ascend and get on that free offer right now and making sure that they're starting to use their data?
Yeah, so feel free to reach out to me on LinkedIn. That's typically the best place these days, isn't it? And in terms of Ascend, go to getascend.ai. And let's say it's completely free, takes no more than a couple of minutes to onboard, and hopefully you realize the benefits that others are seeing.
Awesome. Thank you so much.
Cheers, guys. Thanks for having me on.
Thanks a lot, Nick. Cheers. And guys,
Cheers,
thank you very much for tuning in today. If you have liked what you listened to, do give us a like or review on the listen platform of your choice. And we see you same time next week.
Thanks for listening to the eCom Collab Club podcast. Make sure you like, subscribe, and join our community at ecomcollabclub.com/community.